Well, good morning, folks. Let's do a video. This is going to be unedited, uncut, no jump cuts, none of that sort of thing. My editor's away having his tattoo done, for what that's worth. My kids all have tattoos. I don't like them, but if you want to deface your body, go for it. Right, let's have a look at what's going on. So like I said, this will be unedited and will be rather rough and lots of umming and ahhing and clicking and hissing and puffing. Let's have a look at natural gas. This is the 4-hour chart on the Henry Hub futures at Black Bull, and moving up. Now, I'm still hedged on this. I don't have a position effectively. We're hedged at basically break even. I may as well not be in the market for all it matters, but I'm holding the hedge open. Doesn't cost me anything, just in case we have a dramatic reversal, and I can take some profits off on the long side of the hedge and then maybe add to the shorts. That's my thinking right now. I'm not too sure where this is going. Remember, on the weekly chart, we have this big reversal candle over here, big bearish engulfing. Well, first of all, not an engulfing, not a piercing, but a dark cloud cover, followed by this big spike high. So the overall picture is bearish. There's the 200-week moving average. That's big resistance, exactly where we are now at 3.8-ish. Just above 3.8. I'm just wondering whether we're going to turn around and carry on moving down here from this level today. So that's a very, very important, crucial and key level. Without the jump cuts, you've got to be subject to all my stutters and get an insight into what it's like when you make videos without cutting it up. And so that's the weekly chart on natural gas. This is big resistance here at 3.8-ish. It's the 200-week moving average, and I don't know what's going to happen. Now, we've also got a short position on WTI. So these are kind of playing off against each other. So we're long, we're hedged on natural gas with the idea of being long. And we're short on WTI. I'm quite happy with the WTI trade. There's our position, short from there. And I think we have a short from there as well. I can't remember which one of these we still have on. I think it's just those last two. So this will be, I think, begin to move down at some point. We've got some reversal attempts here. 2 days ago, we had a bearish engulfing candle. We had another one a couple of days before that, a piercing candle pattern. We still have not negated the top of those yet, so those still are in play. It's also a bit of a megaphone if you draw a line along the top and along the bottom there. If we went to a 4-hour chart, for example, you can see that's also a megaphone pattern of sorts, not really. But perhaps a topping formation. Look at these dark sort of candles here. So everyone that's getting excited about this moving up much, much higher, it may go to 75, it might even go to 80, I don't know. But we'll be watching those levels. I'm quite happy with that. Everyone who thinks that natural gas is going to carry on moving up, don't be too sure about it just yet. It may well do that, but remember, this 200-week moving average has not been defeated yet. Even though we've moved up above it twice, we've not closed above it. Let's go to the day chart quickly. And there it is there. There's the top. Remember, we got in at the bottom. We took half of our profits at the top there, and we've now hedged. So the next move is the tricky one. This is also a Fibonacci retracement level from the top to the bottom. Remembering that it's the resistance level on the 200-week moving average. Let's just put a fib in here. I'm guessing we're at about 61.8% as well. And yes, we are. So there's the 618 fib, that blue line up there. And that's where we might find further resistance. Bearing in mind, it's also where the 200-week moving average is. Let's quickly look at that on the weekly chart. And you can see, there it is right there. 200-week moving average on that Fibonacci resistance level. So don't get too bullish on natural gas. Be very, very careful. I'm not convinced that this is moving higher today, this week. It's Friday. We've got the weekend coming up. I think I'm probably going to remain hedged until the weekend. Let's have a look at a couple of other things. I put some comments up on Twitter about Bitcoin soaking up the liquidity. I actually put something silly up in a metaphor up in my private group. I might just read that to you if I can find that. And I said, it appears like there's a line in the sand at 92,000 where corporate interest has firmly placed their buying machines, algos, wheelbarrows, Ford F-150s and Antonov cargo planes. The sardines are feeding the whales at that level. I think we have a floor. So basically, every time we dip down to this level, the liquidity gets gobbled up and the buyers rush in. Now, we've now had 1, 2, 3, 4, 5 major tests of this trend line, well, horizontal line. Notice that this is a very even sort of setup. The top line's at 100, middle line's at 96, the bottom line's at 92, perfectly equidistant and all very significant lines. So we've now got to close on this 4 hour, on all the charts, above 96,000 to keep this thing moving up, and then above 100 once again, and so on and so on. We're also long on XRP. We are long on XPD too. That's palladium. We're long on palladium, long on platinum, and long on XRP, and we're long on gold. So all of those looking okay. Bitcoin scaring a lot of people out, and no doubt liquidating a lot of long positions and getting a lot of short positions involved and potentially trapped below 92,000. So be careful of that. If you are short, I think this asset's going up, and it's going to be going up for a pretty long time. It's going to go in waves, of course, and we may still have a wave lower, but I don't think so. I think this level is pretty key. It's pretty firmly heralded, I suppose, by big interests like BlackRock and perhaps even our friends over at MSTR, MicroStrategy, buying all the dips on Bitcoin, probably buying a lot yesterday. We'll see what happens, and that'll come out in the news, and we'll see how this market moves. That's MSTR. Let's have a look at stocks. We are short on NASDAQ. We're short on the German 30. We're long on Tesla. And that's about it for now. Looking to sell NVIDIA. But let's quickly have a look at NASDAQ. I think we could, if we carry on moving down, I've got some targets I think we could reach. So we're sort of forming this channel now. We've got a channel top. We don't have a bottom. We've only got one touch there. So let's get another bottom maybe to this channel, probably around 20,400, maybe 19,900, maybe 19,500. All of the dots along the bottom here. Notice that these align with the 100-period moving average, the order block, and the 200-period moving average on the day chart, and then the bottom of this larger channel over here where the shorter downward channel coincides or intersects the longer term, larger upward channel. So that's NASDAQ. I don't know how today's, we've got a bit of a descending triangle forming here, and we've been trading this pretty well. Not that we always do, but this has been pretty good. We got the top, we got the bottom. We've been reversing actually on every one of these turns. Whether this will carry on now moving down or not, I don't know. Possibly not, actually. It's looking quite well supported here. Nevertheless, we'll see how we go with that and maybe hedge that or take profit, look to get in later. I wouldn't mind the stock markets moving up to drag Bitcoin up. Bitcoin's my largest holding at the moment. I wouldn't mind if the stock markets moved up. We had to sacrifice some profits on NASDAQ and maybe German 30 in order to see Bitcoin carrying on moving higher, along with Ethereum, XRP, etc. And then the other metals in general, gold, platinum, palladium. Let's have a look at the currencies. We're still short on the dollar yen, and forming this rising, let's have a look at this rising channel. I just had to look back to, there's a fractal over here, and this sort of thing here, this movement here looks like what we've entered into now. So I actually did draw this as a bar replay. Let's quickly do that again. Just want to show you something very quickly. So this move up along here, if you just drag that across to where we are now, looks like we might just be starting that sort of pattern. And if we do have a repeat of that sort of pattern, not identical, it will take us right back up to the previous high, where we might then find a turnaround. This was the unwinding of the carry trade, and also Bank of Japan got involved here. And also the Bank of Japan experienced a bit of a conundrum with higher than expected inflation rates, and but an unwillingness to raise rates further. So a lot of it will depend on the rhetoric from Bank of Japan, Ministry of Finance, and what they actually do, and whether we'll have to follow this pattern all the way back up to this previous swing high, not all-time high, but recent high in comparison. Remember, this currency pair, the US dollar yen, should be trading around about 120. Most of the time it does that. We're now at 150, 160. So there's a lot of space below us, and I'm sure that this will become normalized as we go into 2025, along with many of the other fiat currencies that are flagging terribly against the dollar. I expect the euro and the pound to pick up strength. I expect the Swiss franc to pick up strength. This has been surprisingly weak against the US dollar, and just, one steady journey upwards. So let's see if we can turn around here at this order block on the Swiss franc, or are we going to move up towards closer to parity. I don't know. We've been there quite recently in the last number of years, but I didn't expect the Swiss franc to weaken against the dollar so dramatically, at least given the geopolitical concerns and things that might drive flights to safety, which the Swiss franc often is. Okay, but remember there's a big exchange rate differential as well, which is driving that currency in that direction, and that seems to have overridden the flight to safety, as it has with gold largely. Gold has sort of been going sideways to almost downwards for, I don't know, the best part of 3, 4, 5 months, and no dramatic surge into gold or flight to safety. Same with silver and some of the other metals like platinum and so on, just pretty insipid really. Right, going back to natural gas. So what are we going to do here? I'm probably going to do nothing until Monday, but if I do something, I'll certainly alert my private group. Maybe we get a dramatic move one way or the other today. Probably just going to languish around a bit and do nothing until the weekend comes along. An interesting chart, by the way, the US 10-year. Let's have a look at some of these while we're here. The dollar rand, we have nothing on. VIX, we have no trade on. Looking for this path to carry on. Look at my previous videos on this. Something like that on VIX. Not very exciting at the moment. TLT and the 10-year yield. Let's forget TLT, remembering that we are long on this, and I've talked about this often, looking for this to turn around. We have 3 long positions now, tranches, and looking for this to move up. Now, the key to this is actually the US 10-year yield, and let's have a look at the yields. And we've moved all the way up to the 78.6% Fibonacci retracement level, which is also this previous swing high. So it's a very, very crucial and key level. We've touched it almost perfectly on the US 10-year yield. Now look at what happened over the last 2 days. This candle is today. That's this candle was yesterday, obviously, Thursday and Wednesday. We've got a one up, one down reversal candle pattern here on the daily chart on the US 10-year yield. This is a chart provided by TVC. So that is a reversal pattern. We are at the 78.6% Fibonacci retracement level, which is always the last chance Fibonacci. If we do turn around on any instrument at the 786, normally a very firm indication that that trend will be at least a decent, strong, medium, and possibly long-term reversal. So we're there right now. That's the key level. But it's also this previous swing high. So a pretty key level. And what's interesting is that we did get this reversal one up, one down candle pattern. And only a close above that high at 4.73% will negate that pattern. A close, not a move above it. We could move and spike dramatically up today, move back down again, close beneath the high of that candle, and still have not negated the top of that candle. So keep that in mind. Let's watch to see what happens today. The end of the week could be a really crucial day on the 10-year yield. And I think that's it. Let's have a quick look at cocoa. I've commented on this in the last video. I also put this up on X. So pretty much this really. Looking for this to move down at some point. We're still hedged. There's our hedge point. And looking for this to move down. Only once we move back into this megaphone and then specifically below this yellow zone will I start to unhedge and adjust the trade in the favor of the short side as we start to move down. We're still a very, very long way above where we should be. At the very least, we should get down to one of these trend lines into the 5s and the 6s, but really speaking, we should be down in the 2s, 3s, and 4s, thousands on cocoa. So some work to do for that one, and I'm in no rush to unhedge this. This could suddenly shoot higher, as it often does. We're also long on sugar. We're short on coffee. This is just moving across the page now. Uninspiring, that's our position. We're just above it, so slightly out of the money, not showing any inclination to go down yet. For those who are holding long-term coffee futures contracts long, well done. I know there are a few. Corn, we're about to take profit. Might be today. I want to get up to 4.53. We're at 4.46. We got in closer to $4. Not $4. I can't remember. It's left my head now. It's not cents per bushel. It could be. I can't remember now. But anyway, no, it's not. But there we are. Maybe it is that. I'll remember it just now. But corn, I'll come back to that. So we got in at around 4. We'll get out at 4.50. So about 10, 11, 12% profit on that when we do take profit. Cotton, we're still long on. Still trapped between these lines, underneath the red line. Equidistant and bouncing along the bottom. Still very, very cheap, cotton. And right down at the bottom here. And I think there's opportunity. And the other one that people like to trade a lot is wheat. which is mostly disappointing and has been for the best part of 9 months. In fact, longer, probably a year or more. Look how we've bounced along and bumped along the bottom here. Not to say we can't go lower on wheat, but we did have this trend line breakout, pullback, bounce. That's where we got in initially. From that bounce, then I don't know why, but there was, we broke above there. Some reason to add this on the pullback to break up through that trend line, and we didn't get in. We didn't make any. That trade has run out of profit. In other words, it's out of the money. This one's slightly in the profit still. So there we are below that line, but holding above the recent low. I don't know. We'll have to wait. All of these commodities are a bit low. We need the dollar to actually begin to weaken. Dollar strength has been causing problems not only in commodity prices, but also in the fiat currencies of other countries, and it's causing enormous financial pressure. And also in the US in terms of borrowing rates, when you've got the 10-year yield at 4.7%, of course, that's a really difficult situation. And that's it, folks. I hope you all enjoyed that. Nothing else to say right now. As I said, Bitcoin is the one that we're watching quite intensely today because we've got some size on that, but we're also short on stocks, so we're kind of opposite in direction. If you did enjoy this video, please like, subscribe, press the bells, notifications, and as I said, this video is a little bit scrappy because I'm not going to edit it. Take care.
Pound went up, dollar took a tumble. Charts got me feeling like I'm in the jungle. Candle flickers, markets are riddled. Lost a quid, made a bundle, ain't fiddle. Pip on the dip, got me quids in me pocket. Exchange rate games, put a rocket in me socket. Bollinger Bands, ride them like the tube. Me accounts looking tasty, fresh like new lube. London town where we hustle and trade. Forex fiddler in the game we ain't played. Streets paved with gold, just like Harry said. Broker calls, I'm up, no sleep in me bed.